That is the bear intro. Doo-doo. All right. July or June, I did a Netflix podcast, nflx, and that is most likely going to be on the NASDAQ. Technology sectors, internet services. And I had it still in the stage 2 with some warning signs. I'd have to go back to that podcast to see exactly what was up with that. But time has moved on, the chart has morphed, and these warning signs have come to fruition. You're no longer in a stage 2. If the price action is below the 12-month moving average, then you should not be in the stock. No matter if there's a stage 2 on the smaller time frames, you don't have harmony with the time frames, you should not be there. You had this nice tweezer tops right here. People selling into strength, far away from the 12-month moving average. And you got another go. You got your confirmation month, and you got another chance of trying to sell here. And if you didn't get out here, well, the price went back down, and then you got to close right below 12-month average. This should have been your exit signal right here. Should have sold at the 300 level. And now the price action is staying below. And you know what that means? The more you have price action below the 12-month moving average, it's going to start flattening out, start angling downwards. And then, these are my drawings. Hold on. It's hard to tell where exactly. Here you had the embryonic breakout, right? Some tests of the 12-month moving average broke down below. Now there seems to be a vacuum. I'm not quite sure. This could be the breakdown level here, or else it'd be some crazy target right here. That's pretty deep. We're going to get probably more details on the weekly. The price action really went strong and fast on the monthly, and I don't get these red candles where they stop, and that's how usually I identify my resistance. I go down, red. Where's my red candle? Oh, a red candle that closed there. The wick excluding the noise below it. Usually that's some monthly defined, the beginning of a monthly defined support right here. So right now it's kind of hard to tell where my support is. If this is my support, then whoo, could bounce here, bounce back up, and down we go. Okay, so 12-month average is still going up, and as long as it's not starting to go down, we're probably going to see that we're in the Ichimoku cloud defined support on the weekly. But you should not be in the stock anymore. That's end of it. If it goes back up, then you have to wait for the price action to go back above, close above 390, and after that you play from there. But until there, wherever this red candle stops for November, that'd be our, and let's say the price action goes back up, then that's monthly defined. That's the low. That's monthly defined support because the price action stopped there and then went back up. And then we're going to start creating our range. And then after that, we'll have a measure move to the upside. See, that's the upward scenario, guys. But right now, I'm not looking at that. It's a possibility. It's good to know it's there, that 500 target. But before you get there, you need to close above 390. And until there, we're below the 12-month moving average. And we're going to look to short this guy when all the weight of evidence is pointing to that, guys. Okay. Weekly. That was a beautiful stage 2. Okay, scribbles. Remove all drawing tools. Stan Weinstein style, valid trend line, 3 points, break on the 4 of half a position out, 1, 2, 3, 4 right here. You would have exited. That's your warning sign. And pretty damn good exit right there, guys. Never exit at the top. You never know where it is. Never entered the bottom. But no matter where if you would have entered here on this crazy breakout candle, that huge volume here, the beginning of the green zone, inclining 3-week moving average, price action above, overperforming the SPX. I don't know if some of you played that, but that would have been an insane move, guys. Right here, never closing below the 30-week average, going upwards, and after that you would have your position here. You could even make a case that you had to pull back here, and price action when it went back up, you move your sell stop up here in the trader's way, and you could even remove half of your position here if you played the trader's way. Else, worst case scenario, everything we would have bailed right here when you close below the 30-week average. Stage 3, and we're definitely approaching. Here's my Ichimoku cloud defined support right here. Oh, price action goes in, buyers come in. Oh, this is gonna act like a support. So this is the level you gotta watch out, guys. Embryonic breakdowns, increasing volume, lots of detail, lots of stuff. Increasing red volume here on those candles. And this is the one that hurts. This candle here. This is the pain. This is the damage. This is a sword. The huge sword, man, that just took a slice out of it. Huge move down. Big red candle, but huge volume. That is big telltale sign that some damage is there. Somebody's in the know. Something's happening. Some dumping. I don't know what it is, but you don't want to see that. Just like you want to see those those green volume candles on breakouts. I could inverse the chart with my 1 minus ahead of it. Remember that. And that green candle right here. You see that? That'd be my embryonic breakout. So this would be a big warning sign, or big telltale sign that some people are starting to buy. Something's going to explode. I wouldn't get in there. I'd have to wait for the 30-week average to flatten out, but I keep an eye on it. And whenever I had my breakout candle above Ichimoku cloud, above the monthly defined breakout line, I would enter. Inverse. Remove your bias. Inverse the chart. Don't care what Netflix, what type of cool movies they have. Doesn't matter. What matters is the price action. And right now, we're so close to breaking down. 30-week average. As long as the price action is below, it's going to keep angling downwards. Remember, we had that crescendo volume here. We had this big warning sign here that the chart has to digest. And you see, it wasn't even able to digest it sideways and then continue. It imploded, starting to break down. And we even have here a Mansfield relative strength, underperforming the SPX, declining 30-week moving average, and price action below. So just starting right now to decline. I could imagine a bounce here. Let's identify some more support, turn, resistance. I could imagine here a bounce off this weekly defined support, bounce off this support, turn, resistance, and then after that, break down out of the cloud, vacuum, I don't know where, all the way here to this previously defined resistance or support, what I call a wall. And that could give you a clue. Here would be the good risk to reward entry right here. But as long as the price action is closing below that Ichimoku cloud, then it's just free sailing all the way down here back to this 200 level. So that's how it is, guys. That's how I see it. I wonder if that target coincides with my monthly defined. Yeah, just a little bit above. Here's my monthly defined support where I think it's going to be. Let's go back. Yeah, it starts here on the weekly, monthly defined. So it could definitely have a bounce here eventually. And then after that, go touch that 30-week average wherever it is. Then you have another entry right here. But the best ones are the ones at the beginning, the first pullback, alpha breakdown. If ever you're able to get it, especially stage 4, man, it's fear, panic, fueling that thing, and usually you don't get that second one here. And the pullbacks are, those rallies are sold into so fast that it just picks up and you get these long red candles on the way down until you hit bottom really, really fast, guys. Woo! All right. So we're not out of the cloud. Keep an eye out for a close below those weekly defined 280, 288 levels. And once you're out of it, could be time to short it. All right. Ciao, guys.